Hello, everyone. We are at the pre-show portion of today's PodCat. We will be starting officially shortly in about 3 minutes at 1:30 p.m. So we'll do proper introductions once the show fully starts. But yeah, here we have Aaron, aka Mr. Stingy, and we have Catherine, the host of PodCat, here with us. All right. All good there? All can hear each other loud and clear?
I can hear you,
Yeah.
Steve.
Okay. Awesome. All right. So yeah, we can just chit chat a bit and share the watch parties, etc. Yeah. I was just curious though. We have a bit of time before we start properly. How has Mr. Stingy actually changed over the years since you started? Yeah.
It's been very interesting. I so initially I started out writing just about ideas and I did sort of big ideas on optimization of life, and sounds like a overly complex topic, but just how to lead better lives. But over the years, I think I've been a bit more focused. People seem to like my articles about money, career slightly more. So I tend to focus more on those aspects, and I've learned to not maybe focus on too much big ideas and sometimes to break it down into smaller portions. So that is, I guess, how it's changed over the years.
Okay.
But
Interesting.
every once in a while, I still just go off on a tangent and write like whatever I want, right? So you'll
Right.
see
Right. Right. Right.
some of that on my blog still. Yeah.
So how do you balance then, between, working at, a crypto exchange, blogging, and, you recently just got married as well. So congrats again on that. Yeah. So how do you balance it all then?
Congrats.
Yeah. Thanks so much. It's always a tough one. I think there's been several points in my life where I actually felt pretty burned out. But I think what's really helped is learning to prioritize and focus. So I never let the blog or the side projects get in the way of my main career, because I have very very firm priority that career is number one, and then side project is what I do for hobby. So never let that interfere. And then when it comes to family, marriage, of course, that is even a higher priority. So it's just managing the just everything in life has to have its place. And I think don't take it so seriously. Don't put too much pressure on yourself, and then I think it'll be fine.
All right. Awesome. All right. With that, it's 1:30. So let's get right to it, shall we?
Hi everyone, welcome to my personal finances podcast, episode 36. And today we're going to talk about financial independence. This is just aligned with our in the line of month of August, which is our National Independence Day of month. And Mr. Stingy is definitely one of the top personal financial blogs in Malaysia. And the man behind this, Mr. Stingy, is Aaron. Let's welcome Aaron to be on the show.
Hi guys, thanks for having me.
Hi, Aaron. We're so
Thank
glad to have
you.
you here. I think this is the second time I'm co-hosting this with Catherine, the host of My Personal Finances podcast. So yeah, let's have an awesome chat on financial independence today.
Yeah,
Yep.
thanks so much, Steve.
Thank
Thanks,
you.
Kat.
Well, before we start, just for the benefit of all our audience, would you want to briefly introduce yourself?
Cool. My name's Aaron. I write a blog at Mr. Stingy. That's mr-stingy stingy.com. I've been doing it for, I guess, 6 years now, and the blog has grown. It has evolved over the years, but it's something that I really enjoy and something that I'm very proud of. So I guess you can call it my side passion project, but it's become moderately successful, I guess.
Great. Great. Thanks for the introduction. Well, let's head straight to. So, what is your definition of financially independence?
Financial independence for me, I take the traditional definition of that, which is basically having enough passive income or income from your passive investments or income from your investments. So they actually don't have to work a traditional career anymore. So that, I mean, that kind of income can come from, say, your investments. It can come from, let's say, you have a business that runs automatically, and the idea is that you need to have enough income to replace whatever you used to, I guess, your main career, or you need to have enough income to basically cover all your expenses. So if you can get to that point, which is I think very ambitious, mind you, I would call that person financially independent.
Right. I would even go a step further. Actually, I have very similar definitions as well. But to me, the first step would be, to cover all the expenses with your passive or semi-passive income. But yeah, to actually aim for twice that amount, actually, so 200%
Wow.
of your expenses. So I think that would be even more of a stretch, actually. But yeah, I
Very
believe it's
ambitious,
something
Dean.
that's definitely achievable.
Nice.
Yep. And now that we talk about like financial independence, what are your thoughts about FIRE movement? I mean, widely known as a FIRE movement, but which is financially independent and retire early.
Well, I think FIRE movement is very interesting. I actually like the concept, the philosophy behind it, right? The concept that once you get to a certain level of financials, you don't have to listen to anyone anymore. You don't have to listen to anyone anymore, right? You can do whatever you like. You can quit your job. You can go travel the world. You can do your own hobbies. Basically, 100% free, not dependent on anyone. So I really like the concept. The thing that I have a little bit of mixed feelings around FIRE is that I don't think it's necessarily practical for everyone. And sometimes when you hear FIRE proponents, they talk about it like, anyone can achieve it. It's easy. Just do these 5 steps. I don't think it's necessarily that simple,
It's not easy.
especially,
Gaps.
yeah. Talk about kids, right? Talk about having kids. Financial independent, retire early, and if you're the kind of person that you want to like lavish on your kids, you want your kids to have the best of everything, right? I think most people are going to find the concept of FIRE actually going to be very challenging. So yeah, kind of mixed feelings there, but I do appreciate and I do like the thought behind it.
How
So
about
does
the retiring early portion? Do you think that's for everyone?
I actually don't think it's for everyone. I think, okay, here's my thoughts on retirement, right? The traditional meaning of the word retirement, I think, is actually an outdated concept. The concept of you slave for say 30, 35 years to one company, and then after that they take care of you until you move on, you pass on. I think that's a really outdated concept. I think today a lot of people are trying to search for meaning in their jobs, or reaching that career aspirations of finding something that's very meaningful to them. And I think if you look at it from that perspective, you don't actually need to retire. Like if you find something really good, really meaningful, you don't actually need to retire. Um, I'll give you a simple example. My dad is 76 years old this year. He still works. He's a doctor. He really, really, really loves his job. For someone like him, the concept of retiring early, what will he actually do with the time? He's actually much better doing his work, and the community is better for it, for him to continue working.
I would think that retirement is actually a new concept. Actually, that the concept of retirement only happened, I think within the last 100 years. I think before that, people just really just worked their whole lives actually until they can no longer work anymore. While we're on the topic of FIRE though, financial independent, retire early, do you have any thoughts about, there's like different types of FIRE as well, whether it's the traditional FIRE where you try to skimp and save everything, or what is known as fat FIRE, where you live, a very comfortable lifestyle, with all your needs and wants being met. I think there's even one recently that I've heard of called barista FIRE. So basically,
Right.
it's that you achieve financial independence, you're retired early, but you can work at a cafe or something, or as a barista. Just not really for the money, but to pass the time as well.
I like the concept of working just because you want to do the work. Like, let's say for someone like me who likes to read and write, like if I was 100% financially independent and got tons of savings in the bank, maybe I would just spend my life like writing books. because that's like an aspiration for me. So I like the idea of, if you are independent, using that time to focus on some work that is meaningful. I don't necessarily like the idea of having all the money in the world and then you just go and sit by the beach all day, because I'm not sure that's what that's what human life is so precious. Like, it's not necessarily my idea of how an ideal life should be. So Steve,
I
if you
think
ask,
you get bored on the beach pretty fast. I think if you're
and Steve, if you ask me what do I think about fire, I would tend to fall more on the side of fat fire or barista fire, because the other thing about fire is, you can plan and you can calculate all your investments and savings, but what happens if you have a huge crisis like the COVID-19, and then suddenly your investments drop by 30-40%, and suddenly your fire calculations go out the window? So like Steve has a huge margin of safety, right? He calculates and then he times two. So I don't know, is that like super fat fire or generous fire, whatever you call it, Steve? Yeah.
Right. So, yep. That we talk about like achieving financial independence. So, could you share with us the 3 actionable steps to achieve financial independence?
Awesome.
Sure. Maybe before that as well, yeah, just for those, I think some people are just tuning in. So again, welcome. Here we have Aaron from mr-stingy and Catherine, the host of MyPF PodCat. I'm Steve, the founder. We have some people, sending their love and saying hi as well to the world. So yeah, thanks for watching and commenting. All right. So
Hi guys, thanks for joining.
all right, awesome. Catherine, you want to ask the question again, and I think Aaron, you had some slides as well that you wanted to share with us.
Yep. Okay.
Right.
Yep, just the steps to achieve financial independence. I think
Awesome.
Aaron has the 3 points breakdown.
Let me share my screen, and guys, you gotta let me know if you're seeing my screen.
Yep, you can see your screen now.
Awesome. So I'm just gonna go straight into the tips. Tip number 1, I would say, very actionable, very simple. I would recommend everyone to kindly please track your expenses. And sounds like a really simple tip, but I'll share with you why. There's a management saying you cannot improve or you cannot manage what you cannot measure. So without actually understanding where your money goes, I think it's actually very hard for you to optimize it or to do the allocations to reach that financial independence goal. Now, this picture here that you see is the app that I use myself. It's called Moneyfy. No, this is not sponsored in any way, but I like it because it gives a very nice pie chart of where you're spending your money, whether it's eating out or whether it's transportation or whether it's on your home. So yeah, if you haven't done this before, I really recommend it, because even for myself, I like to consider myself as doing pretty okay with my money. But when I started tracking my expenses, not too long ago, I think just about 2 years ago, I started realizing things that I had never occurred to me before. I realized I was spending so much money on A, B, C that I didn't realize before. So I think if you'll do it, you will actually realize things that you had never realized before. Discover something cool about yourself. Yeah. Do you want me to go to tip 2, Kat, or Steve, or any questions?
Any further tips about tracking your expenses? I think for a lot of people, tracking for a short period of time is pretty simple, but if you're trying to track every single expense for days, months, years, it can get tedious as well. Any thoughts on that?
Yeah, so I'm a bit of a data nerd, so it's fun for me to to track and then look back on where I've been spending my money. But I understand that it's not everyone's cup of tea. So at least I would say that don't think about tracking for years and like quarters. Just think about tracking for say a week first, and then after that a month. I think at minimum you want to have a month, because then you kind of have a baseline for you to look at and make your decisions on. And of course, this tracking your expenses thing is not like a magic bullet. You do it, you have to look at the data, and then you have to make changes to your life. So it's a really good first step. And I think the tip here is to use an app, because every time you just spend, then you just use your app to click it. If not, those days we actually had to write it down and use like Excel spreadsheets, which was much harder. So yeah, do it for a short period of time and keep it short and simple, and hopefully the habit sticks.
Yeah, I do agree that nowadays it's so much easier that we have apps, and then some of them are actually even linked to our phone, our desktop. Gone were the days that we had to use Excel sheet or like paper notebooks to actually write all these things down. It's already so much easier. And also, I think, I mean, I personally actually think that you did mention about tracking for a week and a month as a start. For myself, I do think that the data will only be valuable if you actually track for up to a year. Actually, I mean, that's what I've been through. Like for tracking for a year, that it's when I can really see, like, I actually, I mean, for example, asking a question of person, how much do you spend monthly on travel or personal items products? For a lot of us who have never done any sort of this budgeting, right? They will not be able to answer this question actually. So the easy way, one of the ways to do it is actually to track for a year, and then to average it out to 12 months. Then you will know how much on average do you spend on that particular things actually. I mean, that's what I think, like, what why like tracking expenses is important actually.
Yeah, definitely. And the thing about, like what you mentioned, Kat, if you track on a monthly or a weekly or monthly thing, you might tend to miss out those slightly larger one-off expenses. For example, changing your wardrobe or going for a holiday, which actually kind of plays into your monthly budget as well. Yeah, but I think the encouragement I'm trying to give is everyone just start. Don't think about like
Yeah,
1, 2, 3 years first. Just start, and then I think you'll start discovering pretty cool things.
yeah, just start right now, and don't
Hmm.
worry about missing a few or two like inputs, for in a month. It's okay, but as long as you start tracking, right?
What
That's
Exactly.
a
what
very
what
good
if
tip.
expenses could be fully automated? That means all your bank accounts, investments, and everything could be all connected without tracking. Would that be something that's enticing, or would there be more data privacy concerns with that as well?
I like the idea, Steve, but yeah, I have data privacy concerns. Mostly because I think we've seen so many instances where data got leaked, people get hacked. So I'm not sure if I myself would be fully comfortable if all my spending tracking is fully tracked. I would sort of want to have control over it. But yeah, I think we have to find a balance. Technology is going to keep getting better. The hackers are going to keep getting better as well, but we'll eventually find a sort of comfortable middle ground for most people, I think.
Okay, so if like all good with tip number one, what about tip number two?
All right. So moving on to tip number two. Tip number two is a little bit like tip number one, but tip number one is basically tracking your expenses, tracking your money. Tip number two, I would encourage everyone to actually do a time audit, which
Interesting.
is more or less tracking your time. So, what does it mean by a time audit? I'm just going to give you a really simple example here. So this is a simple time audit thing that I do. I think there are apps out there, but I haven't used an app before. I personally do this time audit exercise just once a year. Uh, and this table here, I write down the activity, I write down the hours per week. Value here, I write on a scale of 1 to 10, how much meaning or happiness does that activity bring to my life? And then action here is my sort of corrective action plan, or what do I do once I've done this time audit exercise. So just really simple examples. I put here playing basketball with my friends. Well, I used to spend about 3 hours per week playing basketball with my friends, and I evaluate 9/10. Like super important in my life. Super happy when I do it. And the action is, of course, don't miss basketball. Okay.
Rain or
When
shine,
COVID
yeah.
yeah, rain cannot lah. Getting old, but um,
Indoor
when
basketball.
when COVID recovers, then hopefully we'll get to play more basketball. Um, Activity number two: reading books. I'm really a bad book reader. I read tons of articles online, but I'm really bad at reading books. So I think 2 hours per week, even then, is pretty optimistic. probably been slacking off more. But the value I get out of it is, again, 9 out of 10. But the action plan here is really, I really need to spend more time reading books. And this is my action plan moving forward. So I guess the question maybe is, what has time audit got anything to do with your financial independence thing, right? I think for some people, time, money is interchangeable. Philosophically, you say where you spend your time, where you spend your thoughts, your feelings on, that's where the direction of your life is going to move towards. So I think that if you are very careful with how you spend your time, you only spend it on time. You only spend your time on things that bring real meaning and value to your life. Say 8/10 and above, and you try to maximize it. You actually find your life moving towards getting better over time. I've done this exercise myself for I think 6, 7 years now. When I started, I was in a position which I was much less happy with my career, much less successful with my money. And doing this 6, 7 years later has allowed me to steer my life into a job and into a situation which I'm very happy with.
Yeah, I think it's really good, and yeah, it might be, how to say, not so linear, or the first thing that people think about when you talk about financial independence, that you talk about time as a
Mhm.
resource as well. But yeah, I definitely do agree it's interchangeable. I think it's important as well to know, like, how much is your time actually worth per hour, and whether the activities you do, is it worth the time that you're spending. And then the last couple of years as well, I've actually been calendaring a lot more. So tools like Google Calendar and all that really help. So I've been blocking in every single bit of my time, trying to also based on my priorities, so everything from time with family, time for exercise, working out, and so on and so forth. Everything will be actually onto my calendar as well.
Yeah,
Nice.
yeah, I do think it's a very, very good tip actually, because I do think like there are a lot of people who use like an excuse of I don't have enough time to do this, I don't have time for this, I don't have time for that. But have you actually done this kind of time audit that actually knows to find out how have you been using your time actually? But I wonder, like, for someone who has never done this, how do they actually start? Do they start calendaring more, like Steve mentioned, or is there a proper way to start?
Oh, so get started is pretty simple. You just need, like, I think half an hour to 1 hour. Just draw out this exact table on a piece of paper, or you can use Google Docs if you want, or spreadsheet. The important thing is to sit down and actually think on a weekly basis, how many hours do I spend on everything. So the biggest thing is probably your job lah. You probably spend 40, 45, 50 hours a week on your job. I didn't write it here, but you're going to have a long list of things, which might be 15, 20 things that every week you spend time on. So you probably don't need to list down things that you spend 10 minutes or 15 minutes on, but just list down the major items. So that's going to work, traveling to work, your hobbies, what you do in the evenings. And then the idea is, from there, you get a baseline of how you're spending your time. And again, you're trying to tweak that as you go along, try to improve it on a. I do this on a yearly basis, by the way, so you don't need to like keep doing it every week. But yeah, just sort of forces you to take stock of your life and where you're headed.
Interesting. Right. So very good tip for the second financial independence tip. What about the third tip?
All right, let's go straight to tip number 3. So tip number 3, I would say, very interesting, would be speak to a mentor for career guidance. So a few things to break down here. When I say mentor, it can be anyone. It can be formal, informal, can be even your boss. But what I mean is to try to speak to someone the next week, the next couple of days when you go back to work. Immediate actionable item, right? Have to do it pretty soon. Okay. Speak to someone who has more experience and ask them about, what they think your strengths are, how do you think your career is going. Just have that casual conversation. And I'll tell you why this is so important. Because for me, at least in my experience, I think that most people are going to have the biggest increases in their income. It's going to come from your day job. Okay, it's going to come from you either moving jobs or getting promoted or taking on a different role in the same company and getting salary adjustment. And I think knowing that most of our salary increases or income increases are going to come through that, it is very important for you to actually be tip top in whatever your career is. Okay, whatever industry in whatever job you're doing, you really have to get excellent at your job, because that's where your income is going to increase. And it's going to be very hard to get to financial independence if your income is stagnant or stuck at a level which isn't very I guess isn't enough isn't enough for you to get to that stage. So yeah, I think speaking to a mentor would be the next tip I would suggest.
Mm. I think it applies even if you're not salaried or employed. Actually, even you're an entrepreneur, etc. The best investment you can make, I would agree, is actually within for your own development or your own business as well. So yeah, definitely a mentor in that sense as well. But how about how important is it would be for mentors other than directly related to your work? Are those important as well, in your opinion?
I think they are superbly important, just because if you tend to hang out with people from the same industry or the same circle of friends, sometimes you tend to get a very one-sided or one-dimensional view of things. It could be salaries, career. You tend to think a certain way because your social circle thinks about it that way as well. So I think it's really important for you to go out and, I guess the traditional way to say is, network with other people from different industries. If this sounds a little bit too intimidating, right? The easiest way is to actually have the easiest way is actually to read books. Read books from a diverse, different fields, right? Just because you are in banking doesn't mean you can't learn something from scientists or people who work as medical doctors. So read widely, because that's a form of informal mentorship as well.
Yeah, yeah. Yeah, I think I totally agree with the point. Like of course, the easiest way, we all encourage people to read more. We should all read more about all these things. But having a mentor is also very, very, very important. Like one point is when you mentioned that the people that we mix with is very important. You
Mhm.
tend to mix with people that you think alike, or people that actually aspire you or inspire you in some ways. So if you have a mentor that you can actually, for example, if you read, we all like success story. We read about maybe Tony Robbins or Elon Musk, or Robert Koch, but they sometimes they seem to be a bit far away from us. So we tend to think that, well, I want to be like him, but where do I start off? But if you actually have a mentor that works at the similar field as yourself, and someone that you can learn directly from, and then someone that you can spend a lot of time with, that will be way more effective to to whatever you want to achieve in life, actually.
Yeah, absolutely. I think in my own experience, when I was a bit lost in my career, like many years ago, it was a mentor who gave me the idea, the spark, and the
Mm.
inspiration to say, okay, maybe you should look outside. There may be better opportunities for you. And then that moment really triggered and sparked a big change in my
If not, you wouldn't might have been a dating guru right now.
life. Yeah, that was, yeah, probably didn't speak enough to mentors, because they might have told me, okay, this is not for you, like do something else.
Mhm. I guess we all have been through that journey where we were looking for something that is best suit us, like personality wise, and also whatever we are good at, where our strength and weaknesses are. We sometimes, as much as we think we understand ourselves, sometimes a third party point of view can be so much clearer, right? Yeah. I guess we have a question from a viewer, right?
Yes, we do.
Viewer.
Yeah.
I'm all ears.
So, um, well, to read this out, can you give tips to how at least quarterly, halfly achieve FIRE while also raising a child via investment, considering post COVID situation?
Wow.
That's a
that
lot of
could be a
questions
tough
there.
one.
Yeah.
That's a tough one. So I think to be very honest, for me personally, I don't think I'm gonna achieve fire anytime soon. Especially because I'm gonna have kids, and everyone knows that kids are supremely expensive, super expensive. So I think the biggest thing that I would encourage if you are really thinking of fire right now, apart from tracking your expenses so you know where to trim down your expenses, you got to start thinking about how you can greatly or even drastically increase your income. Now, tip number 3 here is one of the ways you can speak to a mentor, like ask them like, how am I going to get to the next level in my salary? Alternately, if you find that your career isn't going so well, you may decide to switch careers, move to perhaps a more lucrative field, or you may think about starting your own side gig. So I would say, in a nutshell, really, you have to think about how you're going to really grow your income, because kids are super expensive.
I can totally attest to that, having a newborn recently as well. And just
Congratulations.
thanks. All right. So just to chip in as well, I think just now what you said about priorities, that's really important as well when it comes to financial goals. And I would actually say for most people, your own financial independence, your own retirement goals are actually more important, as controversial as it may be, more important than even your children's education. That means you need to actually, get the funds aside, make sure that you're comfortable, that you won't be a burden to your kids in the future or those around you. And then, secondarily, then to plan for, your kids' education, tertiary education, because, there are options as well. There are loans, there are scholarships available. So to be clear, which are the priorities, and then achieve the key one, while not neglecting the secondary goals as well. Yeah.
Right. So, yeah, thanks for the tips on financial independence. So let's get straight to So, what is your investments breakdown by percentage between different asset classes?
Awesome. So I recently released this article, and I'm just going to take you a screenshot of that article. Excuse me. So the article is called "How I Invest My Own Money." If you want to see deeper principles of how I invest my own money, do feel free to check it out. But this is how I actually break down my investments. So pie charts, because apparently personal finance people like pie charts. Very interesting. Um, Big blue portion here is EPF. That's about almost 70% of my portfolio. And then I've got Amanah Saham, which is 2.61% here. I've got some unit trusts, which is another 2.69%. And then I have the insurance linked unit trust, a very small portion, 0.63. Followed by the private retirement scheme here, 2.66%, this red little bar here. And then robo advisory in the lower risk portfolio, I have about 5.23%, followed by a little bit of gold and silver, 0.79. And then I guess this one always rings alarm bells from the community and also maybe advisors, almost 15% in Bitcoin and cryptocurrencies. And lastly, I have a bit of equity in my own company, which is mr-stingy, the company. So yeah, this is a broad overview of my investment portfolio. I will tend to look at it in a very simplified way of like 80% very safe investments and 20% the higher risk stuff. So if you'll see that this big blue portion, 70% is my EPF, but you add the other safe stuff, that comes to about 80%. And then the rest of the 20% is mostly made up of crypto, Bitcoin, and other portions.
All right, yeah, that's totally awesome, and yeah, I know a lot of us love pie charts, so yeah, we're definitely looking to a lot of people to share their investment portfolios as well. I do have a couple of questions though. I was actually looking back at your portfolio from 2 years ago in July 2018 and comparing to July 2020. So there's two questions. One is, of course, there's the key difference that I saw is that now robo advisory is part of your portfolio in 2020. It wasn't part of your portfolio in 2018. Largely, I think they didn't really exist exist there, but if you could shed a bit more light on that. Secondly, was on Bitcoin and crypto. So I noticed that even way back in 2018, your percentage of Bitcoin and crypto was actually about these levels as well, between 13 to 15%, which I think is actually is fine actually. It doesn't really trigger alarm bell, but it would be good to hear your thoughts on that as well.
So first question, the robo advisory. Yep, you're right. So back in July 2018, when I first wrote this, I think back then the first robo advisory, which is Stashaway, I think they only got licensed right around that period of time. So I hadn't actually put any of my money in there yet. 2 years later, I have about 5% of the portfolio there. I really like robo advisory because it is convenient and it is low cost. So there's tons of articles showing that over time, if you have high costs in your investments or if you have high fees, they are going to eat into your returns. So I really like robo advisory because they invest in low cost ETFs. They invest in US dollar denominated ETFs, which to me, I view it as a hedge in case the ringgit drops. And yeah, I do continue to intend to think more and more of my assets here. Did I answer the question, Steve?
Yep, definitely.
Cool. So moving on to Bitcoin and crypto, I think Steve has already mentioned that I work full time in a cryptocurrency exchange. It's the first regulated crypto exchange in Malaysia, so nothing dodgy, yeah. Fully regulated crypto exchange. So I would consider myself as having a little bit more understanding and knowledge of the Bitcoin and crypto markets. I like Bitcoin because I view it as an alternative asset to the traditional assets like stocks, bonds. So I view it as another hedge, like a different version of perhaps investing in gold and silver, which are precious metals and also viewed as a hedge. So I would consider this a pretty high allocation myself, but it is something that I'm very comfortable with. And how I balance the risk out, or rather the perceived high risk of crypto, is because I have a lot of investments in the safe assets.
Sure. Thanks for explaining that, and I truly believe on having your circles of competency where Bitcoin and crypto will be one of yours as well. Looking at the overall portfolio, though, is it the portfolio that we see right now, Mr. Stingy's portfolio for July 2020, the ideal portfolio that can be, or would you actually want to make some changes over time as well, and how often do you rebalance if at all?
So I hardly ever rebalance. This is it ideal? I don't think so. Just because it's something that I drew up myself from my own reading. This is like completely DIY. I do think that I am reaching the point of time where I do need to get some professional guidance. So perhaps Steve, you and I, we can have a chat after this, right? To get like proper certified financial planner to take a look at this and tell me your opinion. I definitely don't think this. Yeah, definitely. I don't think this is ideal. So it's some. I think this is really the next step for me, lah.
And it looks like we have another question from viewer about investment portfolio. I guess we can bring that up.
Yes.
Right. So the question from Pauline is, do you think you would probably be on a better track to achieve FIRE if you have stayed in your previous professional job compared to what you're doing now? Wow.
Well, so okay, going back into my historical situation. So I spent most of my career in oil and gas industry, yeah. And then about 5 years ago, after doing all that time audit exercise and stuff, I just decided like this is not for me. I'm gonna switch and pivot my career. At that point in time, I changed job and I took like a 56% pay cut, like 50 something, almost 60% pay cut.
That's massive.
Yeah, I had to be very, very careful with my expenses. Since then, I've managed to get some promotions and change jobs again. So I'm a little bit more comfortable now. If you ask me, like, is my salary today the same as my salary like 5-6 years ago? No, it's not. It has not reached that yet. However, I would also say that I have much more career satisfaction. I don't really think about fire or retiring early because I really, really, really enjoy my career. So, yeah, to me, fire is not high on my list of priorities just because that I really enjoy what I do so much.
Yeah, and I totally agree that when you wake up loving what you do, being passionate, yeah, that's ideal actually. And the monetary side, it just comes as part of it as you do what you love. Yeah. All right, I think we have another question from another viewer as well. So Kensing Lim asks, besides being low cost and passive, what is your view of people being actively involved with Robo to the extent of adding to their portfolio on a weekly or even daily basis? I guess it can be more than just Robo, because you can do that with basically any asset class, actually really actively managing it weekly, daily.
I think this goes to what Steve mentioned about circle of competence. So if you know what you're doing, by all means go ahead, right? The only reason why I'm so big on passive ETF is because historically I look at my track record. I know that when I try to be active, right, I try to time, I try to do all these things. It hasn't really worked for me. So I rather play with statistics and be in the uh, follow what the statistics tell me. I think everyone needs to take control of their own situation. If you realize that you are having great success by active management, and it works for you, by all means. But I think for most people, passive low cost is actually going to win in the long term.
I'm curious as well, active, passive. How about for crypto? Feel free to skip this question if you're not comfortable answering. But for crypto, is it truly passive, or are there some active elements as well with that?
My thoughts about crypto is it's an asymmetric bet. When I say asymmetric, meaning that you can potentially lose a bit, but the potential gains that you may earn are, say, 10 times, 50 times, 100 times. So I look at it as perhaps a bit more of a high risk thing with money that I'm willing to allocate here. And I understand that if it goes badly, it will suck, but I would be okay with my life. But I'm looking to get alpha or big gains here if it turns out that. So in terms of Bitcoin, do I actively trade? No, I actually just, I would say actively accumulate because I do think it's still really, really early in the game. So I'm looking for crypto to boom over the next 5-10 years. I'm not overly worried about price fluctuations from month to month. So I'm just actively adding to my position. I know a lot of people make good money trading though. So, again, it's different strokes for different folks, and everyone needs to understand their position.
Yeah, I would generally agree that crypto, we're still very much in early stages. I think we're just out of what I would view as the wild wild west days. So things are getting a little bit more streamlined, regulated, etc. Yeah. With that, we have another question as well from another viewer.
Looks like we have a lot of question about this field. So the question from Roshan: with the stock market booming now, do you ever feel fear of missing out, FOMO, about the amazing returns with counters like the rubber gloves or even tech stocks in the US? And what would you tell people who do you feel fear of missing out?
FOMO, I think all of us get it.
Yeah.
Like I said, I preach like low cost investing ETF, but there's been so many times in my own life, like actively try to time the Bitcoin market, actively try to time this market, that market. It usually goes badly for me. So, so I think I have a natural portfolio to look back and say, don't get FOMO because it hasn't like really worked out for you as well. That being said, I believe in big data. I believe in law of averages. So I'm very comfortable with, like what I said, the ETFs, the low cost investing, because I'm very confident that over the next 10, 20, 30 years, it's going to give still a good positive return. So yeah, I guess over time, I've gotten less and less FOMO, but it does bother me every once in a while. Yeah.
Yeah, I would agree. As long as you have your own personal investment plan, you know your competencies, you know where you're headed towards, and yeah, you just make those investments within your circle of competency. I think someone asked Warren Buffett a similar question as well about his biggest regrets on investments, and I believe his answer was actually not the things that he had no idea about that was outside his circle of competency, but basically those things that were within his circle of competency that he knew he should have taken up, but he was there twiddling his thumbs and actually not making the investment that he should have made at a point of time as well. Yeah, we have another question from viewer as well.
All right, question from Ryan Lee. So, is there anything in Malaysia that you would which uses cryptocurrency for services or buying any item?
Excuse me. Interesting question. So I would say most people currently use cryptocurrency just as a investment or means of investing. If you look at who regulates cryptocurrency in Malaysia, it's the Securities Commission. So Securities Commission defines cryptocurrency or trading crypto in Malaysia as trading securities, meaning that even they look at it as an investment. So people are going to start using crypto as a means of purchasing or as a means of say daily transactions. I think we're still maybe a couple of years away from there. People are doing a lot of technology and research and development in that area, but I think it's a little bit too early for that. Most people are still using it for investing.
Interesting.
All right, there seems to be a number of interest on crypto queries,
Yeah.
so I'm just going to throw in a couple as well. All right. So yeah, recently there was a little bit of controversy, and I think the Securities Commission actually came out warning against illegal crypto ATMs, machines where you can actually put in and withdraw ATM to cash, etc. Yeah. Any thoughts on that? Is there something that should be legalized with a legal exchange here in Malaysia?
So my thoughts on crypto ATMs. So I'm not really sure why crypto ATMs are that popular, because I think we live in an age of everything is online, bank transfer, IBG, instant transfers. So I'm not sure why crypto ATMs themselves would be big. If you say something like perhaps a credit card linked to crypto, I think that actually makes more sense, or maybe even a debit card. So that allows you to spend your crypto on even for micro transactions. So my thoughts on whether crypto ATMs are they going to be legalized? I can tell you where the regulators are probably coming from. Again, this is my personal opinion. I think the thing about ATMs is it tends to fall under the Bank Negara side of policy, because it tends to fall under the banking services kind of things. And whereas the SC is more of the regulating the investing kind of things. So when you have a crypto ATM, this kind of falls into the area, or maybe a bit of a gray area. So I think the government is just being very cautious right now to not allow these kind of things, because it could potentially lead to things like money laundering, or just people moving around money that's not clean.
Yeah, definitely. Money laundering is definitely a concern, together with scams and all that. So there was a question as well about people being approached and being pushed products and nearly making bad decisions. So Ethan asked, besides looking out for scams and making sure there's a fiduciary responsibility, what else should especially fresh graduates be wary of?
I think fresh graduates is very interesting, because you're kind of in that really you have a lot of energy and you're exploring, you're just finding out about life, and very unfortunately often people like scammers and all these fake gurus will come and latch onto that energy. So the thing that people really need to look out for, fresh graduates, I think you should focus on being excellent at your job, because that's, again, I think for most people that's where the big increases in your salary or your income are going to come from. So focus on being excellent in your work, when you explore, make sure to explore things that are legitimate. Don't fall into things that how do you say this? I would say don't try not to explore into the not black and white side of things. For most people, probably the investments, the businesses that you get into, they should be things that are regulated and very clearly are legal by the government. So I think that gives you a very good baseline of what you should explore and what you shouldn't explore.
Yeah, definitely. If it's too good to be true, if you find your greed overtaking you, yeah, those are definitely red flags to look at as well.
All right, the next question is from
Wow.
Luhan. Many people recommend real estate to be part of their portfolio. How do you view this compared to stocks?
Real estate to me is a really interesting one. You'll notice that my investment portfolio, I don't have real estate at all, apart from REITs, which is like super, super low. The only reason for that is I kind of have this principle that real estate is for people to live in and not really to invest or speculate in. But that's my personal opinion. I know a lot of people have made money from real estate. I know a lot of people have done very well with renting and then flipping. But what I will say is that I actually read an article. This was a really interesting article. It was titled, I think, the returns of everything. And what they did was they tracked, I think, 20 or like a huge amount of developed countries. And then they looked at the returns of all asset classes, which include stocks, bonds, real estate, etc. And the top two performing ones over like the past 100 years were stocks and real estate. So take it as take it how you want it to. But from my perspective, I don't do it because I just believe in my principle, and I'm also very lazy to go and collect rent from people. But yeah, stocks and real estate have performed really well over the past 100 years.
Generally, yeah, I would agree with that. I think for most Malaysians, they tend to love their property too much, and most Malaysians tend to have too much in their property asset allocation, myself included, which I'm slowly trying to reduce as well. So yeah, definitely good tips over there.
How many houses do you have, Steve? No, don't feel free not to answer. Just kidding.
A few.
Wow.
All right, looks like we definitely have a very interesting discussion about investment portfolio. We can go on and on about this, but but we only have limited time. So tying in with our Merdeka month, which is month of August. So what are your hopes and aspirations for Malaysia, especially from a finance or economy perspective?
Yeah, stop sharing my screen. I would hope actually for strong institutions. I really want strong institutions for this country. When I say strong institutions, I hope that the judiciary will be very strong. I hope that parliament will be very strong. I hope that like the election commission will be very strong, because I think we've gone through periods of time where people have lost trust in this kind of institutions. Whether they are individuals, certain individuals have caused many people to lose trust in these institutions. So I hope that these institutions will become very strong, very trusted, and most importantly, that they are fair and they uphold the rule of law. Why I'm saying this, again, does this have anything to do with finance and economy? Of course it does, because if the business community does not perceive your country to actually have fair and just laws, if your courts are not good, then why would people invest in your country? Why would people want to do business here? So if we can get to a point where people believe in the courts, people believe in the parliament, then we'll continue to thrive and prosper. Business will boom, and then hopefully everyone will get rich.
Well, very good. So we are almost to the end of this, and so what is your one big audacious habit or goal that you want our audience to take action of all the things?
Yeah, I would hope for everyone to really be able to strengthen their own decision making. it really bugs me, right? It really, really seriously bugs me when I see like a lot of fake gurus, a lot of this kind of very dangerous advice being thrown all around. I see a lot of this happening, and I really want everyone to be able to make their own decisions, to learn to have critical thinking, and I think it will just protect everyone from falling into scams, and they'll just make better decisions with their money, with their life, and with their career. Do you guys get that?
Yep. Very good point about, informed decision. I think it has to come to the point where we all have to be very clear of our current situation, whether it's our financial situation or life situation of any aspect or even career wise. So you have to very clear from do your own analysis or own study about yourself before you make any decision, instead of listening to, there are so many noises out there, so many people saying they know so much about this, but in order to not fall into all these traps, more importantly is you have to know very clear from your side your own current situation.
Yeah, I think it very nicely summarizes everything. Yeah. So yeah, go ahead, Aaron.
Yeah, and I think sometimes people get a little bit frightened. People want to latch on to a guru who will tell them A, B, C, just follow it. Just follow my system. Absolutely, you're gonna get successful, rich, beautiful, blah blah blah. I think people latch onto that because they're a little bit scared of uncertainty. Maybe. I just want to reassure everyone that it's not easy, right? All these decisions in life with your money, with your career, they're not easy, but they're also not meant to be easy. It's a learning process that you've got to get used to. And I just hope that everyone will develop themselves and build their own confidence, that they won't like continuously fall prey to this kind of fake stuff anymore.
Yeah, I think it's a very good point about you saying that it's not meant to be a very easy process. It's a lifetime project. It's a long-term lifetime project. So if someone ever tell you that it's so easy to achieve something, it's chances are it's probably not going to be true actually. So coming from, yeah.
All right, we are going to be going into the random question game section next, and then which Katrina will explain shortly, and we might pick up one or two comments before we wrap up shortly. So yeah, definitely. For those who are just tuning in, we're here with Aaron, mr-stingy, and Katrina on the My Personal Finances podcast.
So it's a random question game. It's generated from a 20,000 combination of all different questions. So it's easy. So once it's generated, I'll read out the question to you, and then you will have to choose from either one. And then not just that, you have to explain why that choice. So, and then I get to ask you one, you get to ask me one as well. So your question will be: would you rather no longer be able to feel happiness or trust? Wow.
Deep question. I'm actually gonna go for happiness, because I feel like I'm diving into the philosophical realm again. I feel that trust is so much more important than happiness, because trust underpins every aspect of our society. Without happiness, society would still be able to function, but without trust, I don't think anything will work. People can't get along, things will not move. So yeah, I would rather no longer be able to feel happiness, as sad as that sounds. But yeah, hopefully I can feel both for the rest of my life.
Very good answer. Well, this is definitely a tricky one, but I mean, to think about it, if you can generally just trust everyone in your life, it makes you happy, right? It leads to that anyway. It makes me easier.
Wow. Deep. Okay.
Yes. That leads us to some deep thoughts, right?
Very, very
Right.
deep thoughts.
Right. So I guess this is my question.
This
If
is
you mind.
yours.
Yep. If you don't mind, you can read out the
Yeah.
question.
So Aaron, yeah, you
Okay.
can go
Oh,
ahead
I'm
and
supposed to
ask.
read out. Sorry.
No
Nope.
problem.
So, Kat and Steve, would you rather no longer be able to feel jealousy or astonishment? Wow.
Steve, you want to go first?
I think I can do away with not feeling jealousy. I think that we need to approach the world that there's a sense of astonishment, there's a sense of wonder in everything that we do. Even if you're doing the same thing again, it can actually be a new experience. Even reading a book, for example, the first time you read it and the next time you read it, you actually glean different things, whether it's from books, from mentors, etc. So yeah, I'll definitely want to keep having that sense of astonishment.
Okay, and as for myself, I mean, from a surface, this definitely looks like a relatively easier question than the previous one. Lucky us. So, yep. So, yep, same. I think I can definitely do away with jealousy. I mean, to be able to admire someone or someone to look up to, that's good. But I mean, jealousy wouldn't be a like positive feeling, I would say. So definitely astonishment is it's a good feeling to have. So it will be so dull or so boring of life if we cannot feel this, right? We need, I mean, if we were to like live every day as same as it is, it sounds like such a sad life.
Yeah.
So
I actually think that if the world did not have any jealousy, I think like the world would be so much better, really.
yeah,
All
yeah.
right, looks like we have a unanimous vote for that. All right, with that, we're going to take one last question, and we can all chip in on this as well. Yeah.
So from Luhan again, any tips or TM strategy to create multiple sources of income? Interesting question.
Yeah. Who wants to go first?
No, you're the guest, so you get priority.
That's,
Um, so my tip here is try to find something that you really enjoy doing and try to monetize that. Just because I think several famous entrepreneurs have said that when it's something that you like or you enjoy doing, you're going to be more resilient. You're going to be more hardworking because you kind of enjoy doing it. So I would say my top tip is if excuse me, if you can find a way to monetize something that you are passionate about or you're good at, then yeah, that's the way to go.
yep.
Yeah, I'll definitely tie into having that circles competency, having your personal investment plan, and knowing which are the investments that you should be involved in, and it can be a mix as well. You should have all the major asset classes, just be diversified and reduce volatility with a better asset allocation, no matter what the economic condition is. But yeah, for things that you feel that you can handle it, you can DIY it. If you feel that you will do better with more passive sort of investments, then and or you don't have the time, or you want to focus on building your career, etc., where you can actually get the most income directly from there, then the rest can actually be more passive, which frees up your time as well.
Right. As for myself, I mean, if we were to top up like whatever you two have mentioned, I think another simple way to start is basically to try different things. I think so. Yep. Whether it's different like new investment, or whether it's something, whether it's your hobby or something that you love to do, it's just don't just sit on it and just start trying something new. You wouldn't know what you will come across. You wouldn't know like what you can learn from these new experiences.
Yeah, I just want to add on to Kat's point. Especially, I think especially when you're younger, you have a lot more energy, you have a lot more ideas. There's no harm in exploring many things, and you will no doubt fail at some of them. But just take it as an experiment. And I think for
Yeah.
us, maybe like myself and Steve, we are a little bit more senior or mature in our careers. We we almost have to cut out certain things because we have to focus on certain things. But when
Yeah.
you are young, you should like absolutely go and explore many things and figure out what works for you.
Yep. Very good point. You just review your own. All right. Thanks everyone for listening. And like before we end this, like, do you have anything else to share, Aaron and Steve as well?
I just want to say thank you very much for the for you guys for inviting me on the show, and I really look forward to more great stuff for you guys. And thank you everyone for joining in and listening.
Right. Yeah. Thanks so much, Aaron, mr-stingy, for sharing with us. I always enjoy talks about financial independence, investments, etc. And I like how we went beyond just the purely financial parts of it. Yeah, but also talking about other important resources and factors like time, mentorship, etc. So I'm sure it's valuable tips for all our viewers as well.
Thank you so much.
All right, thank you. So, yep. Thanks everyone for listening. So I really enjoyed learning from Aaron, Mr. Stingy actually. So he has shared really a few valuable tips, but I'll really summarize to those 3 tips that he mentioned, which is number 1, to track your expenses. Just start right now. Don't wait. And secondly, do your time audit. So time is valuable. We all know that, and it translates to money and all the things that we love. And thirdly, is to talk to a mentor right now. From a third party point of view, you can learn something new, definitely. So those are the 3 points. And thank you, podcasts, for listening. As usual, you can find the show notes and links on our website, mypf.my/podcat. And don't forget to subscribe, and I'll see you next week. Hasta pronto.